What if I told you one of the biggest nutrition companies in the world, a brand trusted by millions, and even promoted by global sports icons, has also been accused of deception, lawsuits, and operating like a pyramid scheme? Sounds unbelievable, right? This is a company that claims to help people live healthier lives. Yet, over the years, it has faced serious allegations, from misleading customers to paying massive settlements. So the real question is this a life-changing business opportunity? Or a carefully designed system where only a few truly win? Today, we're diving deep into the story of Herbalife. Not just the success, but the controversies behind the brand. And trust me, this story is far more complicated than it looks. Herbalife is one of the most recognizable names in the global nutrition industry. From protein shakes to supplements, skincare to weight loss programs, the company has built an empire that spans across more than 90 countries. Every year, it generates billions of dollars in revenue. And chances are, you've either used their products or know someone who has. But Herbalife isn't just a product company. It operates through something called multi-level marketing, or MLM. That means instead of selling products in stores, they rely on a massive network of independent distributors. Ordinary people who sell products and recruit others to do the same. At its peak, this network has included millions of distributors worldwide. On paper, it sounds like a powerful opportunity, a way for anyone to start a business and earn money. But in reality, this system has raised serious questions, because critics argue that the focus isn't really on selling products, but on recruiting more people into the system. And that's where things start to get controversial. Now, before we go deeper, let's be fair. Herbalife has helped many people improve their lifestyle, lose weight, and build communities around health and fitness. So this isn't a simple good versus bad story. Instead, it's a complex story filled with success, ambition, and decisions that many people believe crossed ethical lines. To understand all of this, we need to go back to the beginning. The company was founded in 1980 by a man named Mark Hughes. And at first glance, his story is incredibly inspiring. As a teenager, his life was far from stable. He dropped out of school early and struggled with personal challenges, including substance abuse. But the turning point came from something deeply personal. When he was just 19 years old, his mother passed away suddenly. The cause? An overdose linked to diet pills. She had struggled with her weight for years and had turned to unhealthy methods to try and fix it. That tragedy had a profound impact on Mark Hughes. It changed his entire perspective on health. He became determined to create a better solution, something safer, something more sustainable. Not extreme dieting, not dangerous shortcuts, but a system that could genuinely help people live healthier lives. And from that idea, Herbalife was born. What happened next was nothing short of explosive. Within its very first year, Herbalife generated millions in sales. The brand quickly gained attention through aggressive marketing, including testimonials, promotional events, and direct selling strategies. By the mid-1980s, it had turned into a massive trend. People weren't just buying the products. They were buying into the lifestyle. And more importantly, they were joining the business. Within just a few years, the company's revenue skyrocketed into the hundreds of millions. Mark Hughes became one of the youngest leaders, behind one of the fastest-growing companies in the country. It looked like the perfect success story. A young entrepreneur, a powerful mission, and a booming global business. But here's the thing. When something grows that fast, there's usually more going on beneath the surface. Because behind the rapid success, questions were already starting to emerge about the products, about the marketing, and about the business model itself. And those questions would soon turn into serious accusations. So, as Herbalife continued its rapid rise, the company wasn't just growing in popularity. It was also starting to attract attention for very different reasons. Because when you're selling products that claim to improve health, people are going to ask questions. And those questions started coming in very early. At its core, Herbalife built its brand around nutrition. Their product line includes everything from protein shakes, meal replacement formulas, vitamins and supplements, energy drinks, skincare and personal care items. But one product in particular became the face of the company, their flagship nutrition shake mix. Marketed as a convenient way to lose weight and stay healthy, this product quickly became their top seller, bringing in a significant portion of the company's revenue. The message was simple: replace your meals with this shake and transform your life. And for many customers, that promise felt appealing. However, not long after the company launched, some customers began reporting negative experiences. There were complaints about feeling unwell, digestive issues, general discomfort after using the products. Now, instead of immediately raising alarms, these issues were often explained away. The company suggested that these reactions were part of the body cleansing itself, getting rid of toxins. And at the time, many people accepted that explanation. But regulators didn't ignore it. Within just a couple of years of operation, authorities started examining the ingredients used in Herbalife products. Some components were flagged as potentially harmful or not suitable for consumption in certain quantities. As a result, the company was asked to remove or modify specific ingredients. To their credit, they complied. But this was just the beginning. Because over the years, similar concerns kept resurfacing. Fast forward a bit, and one of the most persistent criticisms began to take shape. Some reports suggested that certain Herbalife products could be linked to liver-related health issues. Now this is where things get complicated. The company has strongly denied these claims. They've stated that multiple investigations by regulatory bodies across different countries did not result in official action against them. So officially, nothing was proven at a level that forced a global shutdown or ban. But at the same time, the conversation never really went away. And when a health product repeatedly raises questions, even without definitive conclusions, it naturally creates doubt. But here's where things became even more serious. It wasn't just about what was inside the products. It was about how those products were being presented to people. In the early years, Herbalife's marketing was incredibly aggressive. Distributors often promoted product with bold claims like rapid weight loss, medical-like benefits, life-changing health transformations. The problem? Many of these claims didn't have strong scientific backing. This eventually caught the attention of regulators. In the 1980s, legal action was taken against the company for misleading advertising. Authorities argued that Herbalife was promoting products with exaggerated or unsupported health claims. There were multiple lawsuits, including cases that questioned whether the company was effectively misleading consumers about what the products could actually do. To resolve some of these issues, Herbalife ended up paying significant settlements. And while settlements don't always mean guilt, they do raise important questions. Because companies usually don't pay large amounts of money unless there's real pressure or risk involved. These controversies started to take a toll. In the United States, the company's reputation began to suffer. Sales slowed down. and public trust wasn't as strong as before. So Herbalife made a strategic move. Instead of relying heavily on one market, they expanded globally. And that decision changed everything. The company pushed aggressively into international markets, reaching countries across Asia, Europe, and Latin America. And it worked. International sales quickly became the majority of their business. Even today, a large portion of Herbalife's revenue comes from outside North America. This global expansion helped them recover from early setbacks and continue growing at a massive scale. But while the product controversies were serious, they weren't the only issue. Because behind the scenes, there were growing concerns from another group of people. Investors, people who had put their money into the company and expected transparency, honesty, and fair practices. Instead, what they found raised even more red flags. So by now, Herbalife had already faced questions about its products. But what was happening behind the scenes was just as concerning, if not more. Because while customers were questioning the products, investors were starting to question the company itself. And when investors lose trust, that's when things can really start to fall apart. Think about it. Investors are the backbone of any large company. They provide the capital, they support growth, and they believe in the long-term vision. But that belief depends on one critical thing: transparency. If a company hides information, or worse, misleads people, then that trust quickly turns into suspicion. And for Herbalife, this became a recurring issue. Let's go back to the late 1990s. At the time, Herbalife was publicly traded, but its founder, Mark Hughes, believed the company was undervalued in the stock market. So he attempted something bold. He tried to take control of the company, essentially buying it back and making it private. Now, on the surface, that might sound like a strategic move. But here's the problem. Many shareholders were strongly against it. They felt the move was not in their best interest. And as a result, the company ended up facing legal action from its own investors. Think about that for a second. A company being sued by the very people who believed in it enough to invest. Even though the situation was eventually settled, the damage was already done. Because it sent a message. Not everyone inside the system was being treated fairly. Fast forward to 2008. Another issue surfaced, this time involving leadership. The president of Herbalife at the time was forced to step down. Why? Because it was discovered that he had falsely claimed to have an MBA degree. Now some people might think, okay, it's just a degree. Why does it matter? But in the world of business and investing, credibility is everything. Investors evaluate companies based on leadership experience, qualifications, trustworthiness. And when a top executive lies about something like that, it raises a much bigger question. What else might not be true? And unfortunately, that wasn't an isolated incident. Over the years, there were multiple cases where the company was accused of providing misleading information. One of the biggest examples came much later. For several years, Herbalife's operations in China were under scrutiny. The company was accused of not fully disclosing how their distributor system worked in that region. Eventually, they had to pay a significant financial settlement. Why? Because investors were misled about how the business actually operated. But it didn't stop there. In another major development, the company admitted to something even more serious. They were involved in improper payments to officials in China. In simple terms, bribery. And to make things worse, they didn't just do it. They also falsified records to hide it. This led to massive penalties, costing the company hundreds of millions of dollars. Now imagine being an investor and finding out that the company you trusted was involved in that level of misconduct. It's not just disappointing, it's damaging. When you step back and look at all of these incidents together, a pattern starts to form. Conflicts with shareholders, misrepresentation of leadership credentials, misleading disclosures, legal settlements, ethical violations. Individually, each issue might be explainable, but collectively, they paint a very different picture. A picture of a company that, at times, prioritized growth over transparency and results over ethics. And here's what often gets overlooked. These aren't just numbers or headlines. Behind every investor, there's a real person. Someone who trusted the company with their money, someone who believed in its future. And when that trust is broken, the impact is very real. But even with all of these issues, there's one controversy that stands above the rest. The one that brought global attention, sparked massive debates, and divided opinions like never before. The question of whether Herbalife is actually a pyramid scheme. Because if that accusation is true, then everything changes. So after everything we've covered so far, the product concerns, the investor controversies, there's one question that has followed Herbalife for decades. Is this actually a legitimate business? Or something much more questionable? Because at the center of all the debate is one powerful accusation that Herbalife operates like a pyramid scheme. Now, before jumping to conclusions, we need to understand something important. Herbalife uses a business model called multi-level marketing, or MLM. And here's the key point. MLM is legal. Pyramid schemes are illegal. So what's the difference? In a legitimate MLM, people earn money mainly by selling products to real customers. Recruitment is part of the system, but not the main source of income. But in a pyramid scheme, the real money comes from recruiting new people, not from selling actual products. And most participants end up losing money. So the big question becomes, where does Herbalife fall? Critics began pointing out something troubling. They argued that many distributors weren't making money from selling products to customers. Instead, they were earning by recruiting others who would then buy into the system. And when that happens, it starts to resemble a pyramid structure. Because success depends on constantly bringing in new people. And mathematically, that kind of system can't sustain everyone. These concerns aren't new. They go all the way back to the 1980s. There were lawsuits and complaints, questioning whether the company's structure was crossing the line. Over the years, similar claims kept appearing, but nothing truly exploded, until one major moment changed everything. In 2012, a billionaire investor named Bill Ackman made a bold and very public move. He bet $1 billion against Herbalife. That means he believed the company would fail. But he didn't stop there. He delivered a long, detailed presentation, arguing that Herbalife was essentially operating as a pyramid scheme. He claimed that once the truth came out, the entire system would collapse. This turned Herbalife into a global headline. Suddenly, everyone was watching. Because of all the attention, regulators stepped in. In 2014, the Federal Trade Commission, FTC, launched a major investigation. For 2 years, they examined financial data, distributor earnings, business practices. They wanted to answer one key question. Are people making money from real sales? Or just from recruiting others? In 2016, the investigation reached a conclusion. The The FTC did not officially label Herbalife as a pyramid scheme, but they did identify serious issues. They found that many distributors earned very little money. Promotional materials often exaggerated income potential. The system needed significant changes. As a result, Herbalife agreed to pay $200 million in settlements. And more importantly, they were required to restructure their business model. The focus had to shift toward actual product sales, not recruitment. Now here's the surprising part. Despite all the controversy, the company didn't collapse. In fact, it continued operating, and over time, its stock even recovered. Meanwhile, Bill Ackman eventually exited his position, reportedly taking a massive loss. So, in a way, both sides walked away with mixed outcomes. But before we wrap up, there's one more part of this story worth mentioning. The founder, Mark Hughes, in the year 2000, at just 44 years old, he passed away unexpectedly. The cause was linked to a combination of alcohol and prescription medication. It was a tragic ending, and in a strange way, also deeply ironic. A man who built a company around health and wellness, struggling with his own personal battles. His death created uncertainty within the company and led to major changes behind the scenes. So what do we make of all this? Herbalife is not a simple story. On one hand, it has helped people lose weight, built global communities, created business opportunities. But on the other hand, it has faced lawsuits, paid massive settlements, and raised serious ethical questions. So the truth likely sits somewhere in the middle. Not completely good, not completely bad, but definitely complicated. Now I want to hear from you. Do you think Herbalife is a legitimate business that has been unfairly criticized? Or do you believe the controversies reveal something deeper? Drop your thoughts in the comments below. And if you found this video interesting, make sure to like, subscribe, and I'll see you in the next one.